Hey everyone, welcome to my channel and welcome back to my subscribers. I had to take a small break from making videos. I had some family visiting me, but we are back in the saddle. This is where we talk about money, saving, and how to turn the fruits of your labor into wealth-building assets. This is Bald Guy Money. I am Bald Guy. Let's talk money. In this video, I am going to talk about gold and whether or not I think it's a good investment. We are going to cover legitimate criticisms of gold, the real performance of gold versus the S&P 500, and I'm going to reveal what I think the price of gold will be by the end of next year. So watch to the very end, especially if you like data and have been considering buying or selling gold. You will not want to miss a moment of this video. As always, none of this is financial advice. Please do your own research and question everything people tell you. And don't forget to hit the like button. Please, let's try to hit 500 likes on this video. That would be a fantastic goal for me. Okay, so is gold a good investment? As with all things, that depends, specifically on what it is you are trying to achieve. Something that drives me crazy though, and I see it all the time on YouTube. Pull up the chart. Okay, this is it. YouTubers saying, well, if I bought gold in 2011, I would have lost money, but if I just bought the S&P index, I would have quadrupled my money. And I really see this all the time on YouTube. And the fact is that it's simply dishonest, and it's a dishonest representation of reality. People like to cherry pick their arguments. It's not anything new. They manipulate data so they can say, oh, look how smart I am and how stupid these other people are. But in reality, and let's pull up the same chart one more time. The 2011 benchmarks that you're seeing here are the high price of gold in 2011 and the low price of the S&P 500 index. And this is the kind of data manipulation that a lot of people on YouTube use to justify a lot of the arguments that they're making. And that's because a lot of people on YouTube are either purposely dishonest or simply interested in presenting their truth when it comes to the price of gold. And there are problems on the other side of the argument too, especially with a lot of gold and silver YouTubers also convincing their watchers that gold and silver are the only things that are worth investing in, everything else is rubbish. That's also not true. But I'm going to present all arguments in this video. So, what is the truth? Well, the real truth, in reality, when we compare the price of gold in 2011 to the price of gold in 2021, by every metric, let's pull up the data. You can see here that by every single metric, the price of gold in 2021 is up versus 2011. What you can see here is that the opening price on January 1st, 2011 was $1,406 versus an opening price in 2021 of $1,947. The December 31st price of gold in 2011 was $1,575. Of course, we're not at December 31st yet this year, but I am using the price of gold today as a benchmark to compare it to that December 31st price in 2011. The low price of gold in 2011 versus 2021, you can see it was $1,316 versus this year the low price has been $1,678. And the high, $1,897 versus $1,954. But specifically take a look at this last metric, which is, in my opinion, the most important metric, the average closing price of gold, which clearly illustrates the price of gold is up 15% versus 2011. It is not down 4%, as a lot of YouTubers would have you, or try to make you at least believe. Now, another thing a lot of these YouTubers preach all the time is dollar cost averaging. I preach it too. You buy the same amount of whatever it is you're investing in over a long period of time to benefit from the average price and the average increase in price or value of whatever it is you're investing in over time. The funny thing is that they never apply it to gold when they're having a good old time bashing gold. And that's not fair. And as I showed in the previous data, buying the average price of gold from 2011 to 2021, and I'm going to show you in deep detail in a moment, clearly you would have made money. As I said, the average price of gold in 2021 is up 15% versus the average price of gold in 2011. So, what if I bought 1 ounce of gold each of the 11 years from 2011 to 2021 at the average price? What would I have made? What would the return have been? Let's pull up the chart. You can see that if I bought 1 ounce of gold from 2011 all the way to 2021 at the average price, my total cost would have been $15,827 to buy all that gold. The current value of that gold is $20,012, meaning that I would have made $4,185, which is a total 26% return on investment, not including any seller's commission, of course, but this would definitely be possible buying from an online marketplace. So, what's the truth? The truth is that the minus 4% returns that many YouTubers say gold has yielded since 2011 is an absolute crock. It's a crock. It's doo-doo. And I've shown you the numbers to prove it. Links to my data sources in the description as always, but that's not all. What about gold in relation to the S&P 500? How have they performed comparatively, and what can we learn from that? Are the YouTubers taking us for a ride once again when it comes to comparing gold and the S&P 500? Well, to be fair, let's perform the same analysis for the S&P 500 that we just did for gold to actually compare these two things fairly. As you can see, using our objective comparison, the gains on the S&P 500 index are really impressive, with the current value of the index being a whopping 41% up versus the 2020 average closing price, yielding 93% return in our dollar cost average example since 2011. And when we compare the S&P 500 performance to gold side by side, let's pull that up, we can clearly see that the S&P has beaten gold since 2011. It's a fact. Now, we're not done just yet. For those who watched my video on inflation, you will know that I've done a detailed analysis to figure out what the real inflation rate has been over the last 20 years. That number since 2011, according to my calculations, is 34%. That's versus the official number of 21%, which we know isn't true because that was really, that data is manipulated. That we know. So going by my numbers, let's take a look at how inflation has impacted the real returns on gold investments and on S&P 500 investments. Maybe those YouTubers in their minus 4% are right? Pull up the data. So, if we were dollar cost averaging into gold and the S&P 500 since 2011, the average amount of inflation I've calculated that you're exposed to over that period is 18.5%. So here I've adjusted our numbers and our returns to show the most accurate numbers. And as you can see, in our gold investment scenario, your profit or return would have been $483, still leaving you in 3.1% profit, inflation adjusted. So there is the last nail in the coffin of the minus 4% since 2011. Now, with respect to the S&P 500, you would have made $14,843 inflation adjusted, which is 57% profit. So why do I look at it this way? Well, the reason is simple. This analysis reveals 4 very important insights for any investor that I take very seriously in my quest to make money, to build wealth, and to improve my lifestyle. So what are they? Here they are. Number 1, the importance of dollar cost averaging. Buying the average price of an investment or an asset over time instead of exposing yourself to the risk to buying a peak price. Number 2, the importance of diversifying your investments, not only holding one thing that could crash or not grow as quickly as something else, but holding multiple things. So you are benefiting when one of those things runs faster than the other and not losing too much money when one of those things crashes. Number 3, this analysis clearly proves that gold is a great store of wealth. In fact, since 2011, even when you adjust for inflation, none of the money that you would have invested by dollar cost averaging into gold would have been lost in real terms. You could sell that gold and recuperate 100% of what your dollar value was then today. And number 4, you have a better chance of getting rich, and I really put rich in quotation marks, but really what I'm saying is you have a better chance of maximizing your return on investment by riding stock market bull cycles. A bull cycle that we are actually currently in right now. So now that we've covered all that, what's the verdict? Do I think gold is a good investment or is it not a good investment? Well, the answer is this. It may not be a great investment to make you rich, but holding gold will protect your money, store your wealth, and it certainly won't make you poor. And despite gold's performance versus the S&P 500, I continue to accumulate gold and try to keep anywhere from 6 to 8% of my money in gold and silver, with about 65% of that being in gold. But after doing all of that analysis, someone could still ask me, why would you invest in gold right now after looking at how much the S&P 500 has appreciated in value over the last 11 years? And that's a perfectly fair question. So what is my answer to somebody like that? Well, my answer is that gold performs well during periods of high inflation. We are only at the beginning of a major inflation cycle right now, which has been propping up the stock market. As a result, I expect the stock market to pull back once measures are taken to mitigate the effects of inflation that they're currently having in the market, and I expect that pullback to be as big as 30%. Basically erasing all of the 2021 gains, and I also expect gold at the same time to climb up above $2,500 an ounce. Does that mean I won't touch stocks? Well, no. It only means that when it happens, I will be sure to have enough cash on hand to buy stocks that have suffered the most that I think have the best chance of recovering back to their all-time previous highs. And how confident am I about gold in a market that's crashing? Well, I'm pretty darn confident. Don't take my word for it. Here's what John Paulson said in a recent interview with Bloomberg. And for those of you who don't know who John Paulson is, he's one of the guys who predicted the housing crash in 2007. And in fact, he made billions of dollars shorting the housing market. So this is a guy who's kind of in the know. And this is what he said. Gold does very well in times of inflation. The last time gold went parabolic was in the 1970s, when we had 2 years of double-digit inflation. Does that sound familiar to you? Well, I know it does to me, because a lot of people have been comparing what's happening right now in 2021 to what happened back in the 1970s. So, why is it that gold will benefit so much when there's a major market pullback? Well, he actually went on to explain in the interview exactly this. That there is a scarce amount of what he calls investable gold. And on the other side of the scarce amount of investable gold, which let's say it's at a maximum of about $10 trillion, which is the total market cap that I've mentioned in previous videos. On the other side of that, you have a massive investment market that is valued at over $200 trillion. And his philosophy is that once money starts getting pulled out of that $200 trillion market and looking for a safe place to go, and a safe place would be most likely gold, even a lot of you know that I believe another one of those safe places is Bitcoin, even though Mr. Paulson would disagree with me on that. The fact of the matter is that when you pull out $200 trillion out of equity markets and try to find a place for it in a $10 trillion market, the only place for the price of a commodity like gold to go is up. And the rises are going to be sharp. So, to sum it up, what I am trying to say in this video is this. Gold is not a loser. It's a store of wealth, and its biggest gains are coming. Number 2, just because you can't touch stocks doesn't mean they are not worth owning. You can make substantial amounts of money that will tangibly improve your lifestyle in the stock market as long as you are careful. Number 3, no matter what you buy, dollar cost average in. Buy the average price over time. Don't expose yourself to the risk of buying the peak price of whatever it is you want to invest in. And number 4, always remember to take profits along the way, especially in stocks, especially in crypto. I've said this in other videos. It's very easy to buy a stock, it's very easy to invest in the stock market, but what you have to remember is once you've set targets, sell the stock at that target to take your money out, at least get the money that you've invested off the table and play with what they say is house money. Thank you so much for watching this video. Thanks again to all of my subscribers who really patiently waited for my next release. I know it took a while, but we are going to be posting a little more regularly now as things are starting to cool off in my life. Cool off, not in a negative way, but whatever, you get what I'm trying to say. And if you're new here, please don't forget to subscribe. My videos are very data-driven. I try to use logic, I try to use math, and apply that to the real world and show you exactly how I'm using that math and logic to invest my money to build wealth and, become rich, so to say. And by the way, this video, it was a lot of hard work to make this video. A lot of analysis went into it. If you appreciate the hard work that I put into it in the analysis, please drop me a like. I would love to hit 500 likes on this video. It would mean a lot to me. So don't forget to show a little appreciation if you enjoyed the video. As always, I wish you all happiness. I wish you success. And I really, really, really hope to see you in the next one. Arrivederci.